Yo guys, what's going on? Welcome back to another weekly forecast slash breakdown. Before we get started, as always, let's quickly run through the previous week's results and just break down how we sort of took the trades and what we were thinking about. Because obviously, you can see from here that there's a lot of greens, and I do want to sort of talk about where I was because a lot of people were confused. I did get a few messages based off on like people from the free channel, just a bit confused on when to sell, when to buy, sort of thing, and they were worried or they were in positions already, and they were selling already while the market was moving up. And we did have a sort of quick chat and saying that you should really use stop losses. A lot of people don't use stop losses. It's a big debate on some people that don't use stop losses and said that, oh yeah, it's targeting your stop losses, don't use them. And there's always a debate, and it's just unnecessary. You need stop losses so it can invalidate your position. Otherwise, you may be holding that position for 2 weeks, hoping it comes back, and it never comes back. So that's my stance on it. Let's quickly just jump straight into the results, and you can see from here, we started off the week on Monday with a gold 1%, and this was, if I quickly jump over onto the charts here, you can see that on Monday, where were we? We were around about here. So 17th, yeah, this is the Monday, isn't it? So you can see that from Monday we were around about here, but price was sort of holding above this area here, and I believe this was the price action right there. We did get a big drop back down. You can see from here, price failed to break this high and push back down, right? On this area, I was marking these two highs here, and I knew that because price is already taken at this low right there, what price could do is it could keep climbing, and that's exactly what it did. That's what we were looking for. We wanted to see a price action to show us that it wanted to keep going up, rather than price doing something like this and then going up. And it showed us just that. If I just drop down to the lower time frames here, you can drop down to the half an hour and just have a look right here. You can see that when price dropped back down here, we had a big bullish move up at 10:30 towards the mid part of the session, and that's when we had a lovely sort of breaker block here. And it was at this point I was like, yeah, we've got, it's Monday, the market's bullish, there's a lot of probabilities going on here, and you got one of these highs that have been still left behind, so it's worth taking a buy from here and hoping that the Asian session pushes up. And that's exactly what it did. Price pushed up, hit my take profit, which is above this high right here, and then the trade closed. But you can see exactly what happened straight after. The price did push another 300 pips up in profit. But again, if you were in the group, the VIP group, you would have got that signal, and you may have even held the trade if that was following your analysis. But I'm happy with that 1%. I'm trying to test something out where if I take the profits on 1%, how much can I grow the account? Because a lot of the times we tend to hold the trade, expecting that it's gonna go, all the way up to your target. But then what happens is it comes back to your entry, and then you end up missing some of that sort of profit that you would have had if you had taken it. So I'm just trying to test something out. That's why a lot of these results, you can see if I go back to the Telegram, 1%, 1%, 1%, 1%. Now this was 1.5 because I wanted to hold it a little. But you can see based off this 1% thing, I'm trying to close these trades at 1% because I know that I'm guaranteed that. It doesn't matter if it carries on. I just want to take that profit, and we made it and went out, and we can be happy for the rest of the day. But with that, we just carry on. Let's go to the next one. We've got obviously another gold 0.5 that was on Tuesday. Similar sort of thing, but it was a 0.5 because price failed to continue its bullish move, and I believe it was somewhere around here where we were expecting price to continue up, and it just failed to do so. I think it was this here. We were expecting the price to continue up, but price pushed down first overnight and then went to the target. So again, we got taken out at break even here around this area. Price came back down, then pushed up to clear the highs. That was another sort of bullish scenario. You can see if price was failing to break these lows here, you could always bet on sort of buying this market, because again, we are in bullish moves. And this is what I say time and time again. If you guys have been watching my weekly forecast quite often, you tend to notice that on Monday, Tuesday, Wednesday, I'm expecting for that one-sided bullish move, and then towards the end of the week, look at that, price just comes back down to close off the week right here. So this would end up creating the high of the week right there, and then price action closes back wherever it needs to close to end the weekly profile. And that's exactly what I look for. You can see from Monday, because Monday was bullish, okay, cool. We then look at Tuesday's price action, because Tuesday's price action showed that it was bullish again. We then continue that. We ended up getting a move there, getting a reversal. Obviously, with this being FOMC, now it's the time. It's the point where we're looking for that reversal, and you can see from FOMC, we were creating this sort of wedge pattern. Now with this wedge pattern, I don't want to trade. I don't want to be in this trade here. I know that, okay, fine. The only way I want to sell the market, because again, following the profile of bullish start of the week, reversal end of the week, you want to start selling after Wednesday, Thursday sort of thing. And the only way I'm going to end up start looking for sells is if price clears out the prior highs. Simple as. There's plenty of liquidity up here. FOMC can easily take out these highs, which it did. Again, if you are buying, well done. Obviously, we will get onto US30 because that's what I was focusing on. But price, you can see that price action took out these highs here, and then it was overnight where price came back down to these lows here, and this started to show that gold was slowing down. It wanted to turn around. We then tried to attempt a sell here on Thursday. It failed. Cool. Okay, it failed. And then I did send over on the free channel that price will likely push up. If it wants to push down, we need to see that. And then you guys can look to get in on a retracement. That's exactly what happened. Then we had a nice 300 pip move back down to 3K. Fantastic moves there. And that followed the weekly profile nicely. Bullish start of the week. And if I was just trading gold, I may have just would have, risked it and got in. But because we were focusing on US30 as well, which again is not a problem because we made profit on both sides, as long as the analysis is correct, you'll be good to go for another week. And that's pretty much it. What we ended up seeing was a lot of people were selling here. They were expecting the price to move back down. But again, I've noticed time and time again when there is FOMC red folders, as you can see from down here, if you see these red folders, just why are you trading beforehand? Just trade after it, because you can see that before it was all of this. Oh, that's bad drawing. Before FOMC, you got all of this price action. That's a bit all over the place, isn't it? After FOMC, you got all of these. So you can see that after FOMC, this was when the main move happened. But before FOMC was just a bit of a chop fest, as you can say, going on here, because it's like everyone's anticipating the interest rate results, but a lot of retail traders, or a lot of us, just sort of want to just get in on the quick moves before the impulse sort of thing and to catch it. But it'd be much safer to catch it after, because it's actually confirmed, and then everyone else is on the train with you, and then you'll get a much bigger move, much more of an impulse. And this is what happens time and time again with FOMC, CPI. You tend to get the move back one way, and then this all the traders before the news release have been taken out, and now it decides to go in actual true direction after the news event. So I noticed, because obviously a lot of people started wasting their risk beforehand and lost before FOMC, and now when FOMC comes, they're going to step away from the chart. But it's at that time you could have saved all that risk and just gave it at least one or two attempts there. But because you already risked, your 3 losses beforehand, it's now that, I can't trade now, I'm going to come back tomorrow, and then you miss out on an opportunity. Now, when I go over to US30, I'm going to explain just that point there. So you can see here on Wednesday, we focused on US30. And this is where I'm going to start talking about. And again, we did catch a Tuesday trade as well for US30. So let's quickly go over to US30, because I know a lot of you guys are wondering how we're sort of getting into US30, how we, you can see that the results are starting to come in because of the consistency and the time and effort I've been putting in on this market, trying to make it on the same level as gold. And to be honest, US30 is starting to take that lead in how I feel a lot more comfortable with US30 compared to gold now, because gold is just on this bullish move, bullish trend. Sometimes it just, it acts a bit weird, whereas US30, you can kind of predict it and the way it moves if you keep at it. A lot of people think that it's very easy. It is very hard. Even we are catching, some losses here and there, and I'm going to explain that. from this Tuesday move, which was around about here, I believe. Where's Tuesday? Here. So you can see the price moved down. I believe we were trying to look for a bullish move on Tuesday. Did we get it, or was it the bearish move? Let's go over to the US30 channel. Find Tuesday, which was 18th, I believe. Last win. There we go. Okay. So what on Tuesday was a very interesting one. You can see that Tuesday's result was quite low compared to the rest of them, and the reason for that was we were trying to catch a buy move from here, right? After prices now retraced back into the range from the left, you can see that this is a support and resistance zone. It's an order block, right? So I was expecting for price to come back down here and push higher, right? Again, similar sort of model I was following on US30 as well, was Monday, Tuesday, Wednesday, I was expecting bullish moves, and then Thursday, Friday back down. And just a little spoiler ahead, you can see that we did get a move like this, but I will explain why we bought here instead of selling because of Thursday, Friday. But Monday, Tuesday, Wednesday was a bullish sort of move, and we were just looking for a retracement. Simple as. We're looking for a retracement. You can see these highs are still left as price is falling down, and again, this is going to be our target, as you can see from looking to the right here. Now, when price retraced into this area, we don't know exactly when price is going to start making that move. So we attempted a sell, two small sells here with tighter stop losses. We were taken out. Price decided to push a little lower. And then once we'd ended up seeing that momentum, and I think it was right on the PM session. So again, timing would have helped here. But you can see all of these wicks. These wicks are dangerous when you trade US30. It could look like it wants to keep going, further down, but it actually is just taking out traders early and then starts pushing up. And once we ended up getting into this momentum here, you can see that price started breaking out of these highs. This is where we ended up getting into this long position right there. And then the stop loss was back at the low again. And again, where were we targeting? If you look to the left here, we have these highs, and the main high at the top here. And if I just scroll to the right, you can see that we ended up getting a nice New York session open sort of move, which took out the high there. That was your move right this, and then price ended up taking out the highs just like that. And that's that Thursday trade done, right? But now, going into Wednesday now, this is the FOMC day, and you can see what happened on FOMC. It was all over the place. So on Wednesday, actually no, this was the Wednesday. What am I on about? So okay, so you can see here we were trying to look for a buy to take out these highs. Price action is respecting this level. We ended up taking this trade before FOMC, right? Because we were already in it. There was a lot of confirmations. We bought as low as possible, and you can see prices in an uptrend. Now it comes to the FOMC, where price did the exact same thing, just on the smaller time frame. You can see here price pushed up here at New York session, dropped back down before FOMC, and where did it drop back down to? Retested a key level, key support level. We wait for the break and retest, and again you can see that on these candles we have a break with this green candle, we have a retest on the white candle, stop loss below the low. You want to see it push straight up, and that's exactly what it did. And where was the target? That was the final target. Simple as. That was lovely trading there on US30, especially with FOMC. And now we sort of move into why we sort of bought on Friday, right? If you're saying, Monday, Tuesday, Wednesday is your buys, and then you're expecting a reversal at Thursday, Friday, I was initially looking for that reversal on Thursday, right? But because this price action was so wild, I was like, this doesn't seem right, right? And this is where the whole liquidity area came into play. You can see that we had left a double bottom here, so I was expecting that price may just fall back down on Friday. And then what ended up happening was we did try and take the sell failed. We took initial buy, the buy failed. We took a sell, the sell failed. And now I'm just like, what's happening? So what I decided to do was stick to my higher time frame bias, switched over to the higher time frames, and I can see that because this weekly fair value gap is still sitting here and it's not been rebalanced, I was expecting for price to push into this before another sell-off again on US30. So I stuck with it. I waited for that sort of bullish reversal, waited for that retest, and the price came back to retest. New York open, we bought, stop loss below one of the prior lows, and you can see the rest of it was clear, where price was falling away from the Asia liquidity here. You can see the Asia liquidity price pushed away, and then with the New York model, what price would do is it would go to attack the Asia liquidity. It's simple as price would fake, push down into a deep discount area, which it did, and it turns out, if I drag this box across, push back into the same level where we were buying off on Tuesday and Wednesday. So there we go, support and resistance, guys. That's how it works. And it's a bit more tricky than how we learned it from the basic support and resistance levels. But you can see that these levels do work, and if the timing works out and you can see all the rest of the price action is lining up, then you can get in on those moves. And again, because our higher time frame bias is up into this weekly fair value gap, I was happy to swing this trade so we can continue the bullish move going into next week. So going with the US30 forecast for next week, I just move, I can't move all of these, can I? No, it's not gonna work. Okay, so going into the weekly forecast for next week on US30, I'm expecting bullish moves again to start off the week. And if price can get into this area, this is where we want to see a reversal back down to clear off the sell side liquidity and to take out this low again. Because when we look at US30, when price makes a low and moves up, you can see from, if I remove my drawings, ignore me, this is my back testing, you can see when price makes a low and moves up, it does not fly to the moon after it makes that one low. You can see that price, created a low, it moved up, and it came back down to clear out that low and then decided to push up. Here's another example. Price hit a low, moved up, took out that low and moved up. You could say that, yeah, price hit a low and moved up here ways, and then it starts taking out, and now it's in the main move. But this move up didn't seem, like it would attract buyers anyway, because you can see it's a downtrend. So because it's still downtrending and this is now looking like an uptrend, this would attract buyers. So what the market would potentially do is it would push up into a discount area, take out those buyers, and then decide to go. So that's what I'm sticking with. Hopefully it works out. I'll keep you guys updated. But that's US30. Let's move over to gold. Now, what's gold doing? Gold has now pulled back into that 3K level, potential area of support here. You can see, and our price is starting to push up. Now, looking at this, at the moment, you have this level here, right? So I'm going to move the swing point right there. There's your swing point. From how I'm looking at it right now, right? If price breaks above this level, you're likely to see another bullish impulse, right? Because price has retraced into discount, pushed up. If price pushes back down here, you want to start seeing that similar sort of thing, where price starts faking out and starts pushing back up. Because the lower price goes on gold, you want to start buying it, because yes, price may still be bearish, but again, it's hitting these support levels. If price starts breaking below this little section here, then I'd start being careful with buyers, and price could potentially push a little lower back into this area to then maybe move back up. But for now, we're sticking on the lower time frames. We want to see the price action work out and the timing, make sure it's all good. Going into next week, in terms of news, we just got durable goods and GDP growth, so nothing too major, but again, it will be enough to sort of guide the market. But you can see the way this is falling down. It's downtrending at the moment, which again is a potential. You can see if price breaks out of this trend and retests it, this would be a good opportunity to start attacking that all-time high again. So again, people who are selling, be careful. You don't want to sell in this market with higher risks, because look, if I go to the daily time frame, why would you be selling in this market? Yes, maybe you'll be able to get these little sells here, but the main moves and the main bigger moves are bullish moves. And we can see here on the daily time frame, price tapped into this little mini order block here and then rejected back up. So price could easily continue. Let's see the weekly fair value gaps. We've got some. So I'd suggest that if price wanted to move up here, it can. We'll let that price, that swing point break first, and then you can continue. However, what price could do is it push back down. If it push back down into this area, you could see price push a little lower into this little area. You can see we've got a fair value gap here, and if we get a lovely reaction off this, then we can potentially get another swing move after taking out the liquidity. But that's pretty much it. It's a bit of a longer video that we decided to make today, just because I wanted to break down quite a lot of things. And it's a very good sort of week that we had, and yeah, especially on all the price action. So if you guys enjoyed, don't forget to comment on what part you found interesting, what part you've learned today. Don't forget to like. Don't forget to share this video. Links are all in the description. If you guys have made it this far, thank you. Thank you for listening to me waffle about the market. But that's pretty much it. It's been a waste of FX. Peace out.